The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Singapore stands at the forefront of Asia's financial transformation, serving as a pivotal gateway for investors seeking exposure to the region's dynamic growth markets. So how can investors unlock the full potential of alternative assets in this evolving landscape? And what strategies best leverage Singapore's position to navigate market complexities and capitalize on Asia's expanding private markets? Well, to find out more, joining me now is Johnny Adji, who is the Alternatives Investment Leader for Mercer Asia. Johnny, welcome to the show.
Thank you very much, Hongbin.
Thank you.
And thanks for having me.
Thank you so much for joining me. Well, Johnny, what macroeconomic or structural trends are driving investor interest in alternatives across Asia?
Sure. And, I must say that these macroeconomic drivers is not only applicable to Asia, right, but rather globally. So if you look at, one key seismic shift that happened about, say, 24 months ago globally is the sudden increase in interest rates. So this has implication globally, and particularly in Asia. That means more investment opportunities open up, particularly in the credit space, and that is basically driving the investment and flows into the credit space today.
Well, then on that note, how is Singapore's position as a financial gateway to Asia shaping the demand for alternative investments today?
I think Singapore is well positioned relative to, say, other Asian financial centers. And I think particularly for Singapore, it's uniquely placed amongst, say, the wealth management space or even the family office space. Because, I think for the last 5 years, right, if I remember the statistics correctly, about 700 family offices, if not more, have set up offices here in Singapore. And the general trend, particularly for, private investments, is retail money is likely going to gain importance. And of course, institutional investor capital, according to some statistics, will still account for about 80% of the investments. But retail investment is likely going to go from low single digit, potentially up to 10 or 20% of the demand.
Okay. So how do you see the role of private debt evolving in Singapore's investment landscape then, particularly amid rising interest rates and tighter credit conditions?
Yes. So when you talk about private debt, people will assume that this is a fixed rate, right? This is not a correct perception. When you invest in private debt, particularly senior direct lending, you're actually getting floating rates. So if base rate goes up, you're actually protected and you're returning more. You'll generate more return. So in terms of, say, the investment landscape, I think private debt should and is getting more attention and demand, particularly amongst the insurance companies.
Okay. So which sectors within, private markets, Johnny, currently offer the most compelling opportunities for investors based here in Singapore?
On a risk-adjusted basis, we like private debt, followed by secondaries and co-investments. And this is basically focusing on private equity, followed by private equity itself, and then real assets. This is how we're stacking the cards, so to speak.
Okay, so are there any subsectors then, such as digital infrastructure, sustainable real estate, or secondary markets gaining traction among allocators here in the region?
Yes, as I mentioned previously, secondaries is definitely at the forefront. And the reason why we like secondaries is that we're buying those positions in more mature funds at a discount, right? And given the increasing uncertainties in global trade, tariffs, etc., I think it's better for investors to make the money on the buy instead of betting on robust global growth in the future. So that's why we're favoring secondaries first and foremost. But having said that, we're also positive on digital infrastructure. And for sustainable real estate, it's almost a given.
Okay.
If you want to invest in real estate, sustainability has to be incorporated into your strategy.
Well, then, given today's market volatility and geopolitical tensions here, Johnny, how can alternative investments be used to build portfolio resilience for Singaporean and Asia-based investors?
Two key points, right? The reason why private investments is a good diversifier to, say, your public equities portfolio is because it's not subject to market on a daily basis. The market or the valuation cycle is typically on a quarterly basis. So that's one key point or key takeaway for your audience here. The second key point here is that for particularly retail investors or even institutional investors, right, your ability to buy at a discount, and this I'm referring to secondaries at the moment, right? So it's good if you can buy low and potentially sell high, right, at NAV. That's the basically investment 101 thesis.
Okay, so what strategies are you seeing amongst, investors to, optimize diversification within alternative portfolios?
Sure. I'm assuming that most of your listeners, right, are retail investors or HNWI investors. So for more retail or HNWI investors, we believe the use of indirect investments, such as fund of funds, or through digital native retail channels, or as well as our own investment solutions, could be a better way of access alternative investment portfolios because the minimum threshold to invest in private assets is significantly lower compared to you investing in the funds directly, which typically has about 5 to 10 million minimum commitments.
So how can private markets help address concerns around, inflation hedging and yield generation in Singapore's low yield environment then?
Yep. So let's tackle the yield generation question, right? As mentioned previously, we like senior direct lending because you can get about 8, 9, or on the outside 11% return in US dollar terms, which is significantly more attractive compared to, say, for example, the Singapore savings bond or even Singapore denominated cash equivalent, which is generating, say, about 2.7 or maybe on the other side 3% to 3.5%. So that's on yield generation. Secondly, the other private market asset classes, particularly real estate or infrastructure, they do have inflation adjustments or escalator in their contract, right? For example, if I were to lease an office building, right, in the US or in Europe, typically if you're on a longer term lease, say 5 years or 10 years, each year the rent will be adjusted according to inflation, right? So if you pay $10, next year you'll be paying $10 plus 2% inflation escalator. So that's one way to hedge it, right? The second thing here, instead of just basically treading in line with inflation, particularly for private equity, for example, we view that as a growth asset. So historically, private equity has been returning about 15 to 17% net over the last 10 years, which is significantly outpacing inflation. So instead of just hedging against inflation, you're growing significantly above inflation. That's how you protect and grow your wealth.
Okay, so what role then do you see for emerging technologies like tokenization or AI in expanding access to private markets here in Singapore?
Okay, let's tackle AI for the moment because that's definitely the hot topic of the month, so to speak. Seeing more managers or fund managers in this case using AI in their investment process. This is generally still centered around public equities, but we're seeing additional application of AI in private credit, for example, in terms of, searching for certain characteristics or covenants, for example, in the loan documents using AI. Now, have I seen the actual implementation of AI in private asset classes such as private equity or real estate or infrastructure in order to help make the buy decisions? No. But what I'm seeing, what fund managers are doing is to use AI, for example, to prepare for their investment memos. So that is, essentially one very practical use of AI. Now, let's address the other key points such as tokenization. I think this is actually quite interesting. What tokenization allows you is to participate in alternative investments with small, limited amount of money or capital. There are obviously limitations of tokenization, depending on which asset class you talk about. Let me give you an example. For example, in real estate, we already have REITs in Singapore, right? Which basically you can put several $100 or say $1,000 or $2,000 and buy REIT stocks. So the application of tokenization is less relevant there. But do I see more tokenization being applied to larger investment types such as private equity? Yes. Now, having said that, I don't think that private equity funds will start tokenizing their investment up to, say, $10 or even $100. But we have seen another form of tokenization is through digital native retail channel, whereby the minimum to invest in a private equity fund has been lowered from, for example, the $3 to $5 million or $10 million in a typical fund to about, say, $100,000, which is still very expensive, but from an HNWI point of view, it's quite affordable.
Well, overall then, Johnny, before we let you go here, what long-term trends should Singaporean investors watch to stay ahead in alternatives?
Yes, I'm hoping that your listener will remember these three key takeaways. First and foremost, be aware of long-term macro tailwinds in order to position your portfolio, right? Be it, global trade growth or potential fracturing from onshoring, nearshoring, etc. The second key point is that do not time the market. Do not try to do that. Always be invested. And the third point, which is the most important point here, you need to always keep a diversified portfolio. And this is not only across developed markets, but also emerging markets.
Well, thank you so much, Johnny, for your time and your insights today.
Thank you very much. Thanks for having me.
Thank you so much for joining us. That was Johnny Adji, who is the alternatives investment leader for Mercer Asia. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.